So it's with some Jordan right back here, and in this lesson I want to be talking about the exit indicator. So we are going to be looking at the exit indicator. Don't forget, we are still on this series of how to create your own trading strategy. Emphasizing this because when you create your own trading strategy, you'll be able to make more money compared to when you follow what others do teach or what they have discovered from the market by themselves. So it's always better to be your original. Okay. So we have checked the baseline, we have checked the primary indicator, we've checked the secondary indicator, we checked the volume indicator. Now we are wanting to check on this, what we call the exit indicator. So what is the purpose of the exit indicator within this trading style? So let's find out. Okay. So we are looking at this exit indicator. Okay. So what's the exit indicator? It says that my job is to help you exit your trade at the best time. Okay. The, that is a that's the basic advantage or the basic use of the exit indicator. Its purpose is to help you exit a trade. Okay. And at the best time. So we are looking at the exit indicator. Okay. As the name sounds, this indicator is used to exit trade. This indicator shouldn't be so fast to exit the trade early or too slow to exit the trade late. Okay. This indicator will always help the trader to determine the start and end of the current trend. So I want you to know that as a trader, you only make money when the market makes such a move. And when it retraces, you're out. When it makes such a move, you're in. Retraces, you're out. Makes such a move, you're in. And then when it consolidates, you're out. Or when it becomes choppy, you're still out. Okay. And then you have to wait for it to form a new trend. This is where you make your money from. Okay. So we are going to jump onto live chat and then see how this exit indicator. We are back onto this live chat, and everyone can be able to recognize that this is the Aussie New Zealand and it is on the daily time frame. Okay, it means that each and every candle on the screen takes 1 day to form. So we already have a baseline which we are going to use, and in this time it is a moving average process. Then we have the primary indicator, then we have the secondary, we have the volume indicator. Now we want to add on an exit indicator. So we want to check on the exit indicator, right? So we can add in some of these indicators that can be used to exit a trade oscillator. We can use the relative strength index, surely. No. We can use the relative vigor index, maybe. We can leave it at that period, sure. Okay. We shall try to alter. Let's try to use 20. Let us try to make the colors become more dark so that everyone can be able to see. So as everyone is seeing that this is now our exit indicator. When it gives us a signal that is in opposite of the trend, of course we exit that trade. So you can say that when the green line is above the red line, we are going long, and when the red line is above the green line, then we are going short. So we are saying that, for example, if you sell from here, if you sell from this level, we want to determine where should we have exited the trade from. So what we do is that we follow our exit indicator. It is the one to tell us when it changes direction. Of course, that is where we also change our direction from. So Control F. So if you sold from this candle, this was a signal candle for everything. So if you went short from here, it means that you had to follow your exit indicator, and then it moves down, and then maybe around here. Maybe on this candle, that is when it exited. So you had to sell from here and then exit from this candle. Okay. So you wait for it to go short again. Maybe this was the best time to exit. So this is not the best exit indicator, or this was the best time to exit. Okay. So let's try to look for another scenario. For example, if you had a buy order from here, because everything says that we are buying, and then you move on to the second candle, you look at the exit indicator, it says we are in. Move on to another candle, exit indicator says we are in. Move on to another candle, it says we are still in, and then you exit from here. That is how you exit with this exit indicator. So what happens in most cases, to make more sense, is because we know that the market does not move in a straight line. Okay, the market will always move forming retracements. It is in this format. Okay. So what we do is that now, for example, when the market moved here and then it made a retracement, we are sure that it is going to move up once again, then retraces, then it moves up once again. So for example, now when you look on your chart, you can see that the exit indicator was saying that we should exit from this candle. But still the person is asking, why shouldn't we have waited to find this? Of course, well, we don't know what the future is going to bring. So what I normally recommend is that when you enter your trade, and then the exit indicator maybe forms, gives us a signal to exit maybe from that small green candle you're seeing, this one here. Okay. So what you normally do is that you do not exit a trade wholly. So what you do is that you shift your stop loss and then you put it at least around 5 to 10 pips below the swing low of the previous candle. So this was the candle that where the exit indicator says that we should exit. We normally shift our stop loss and then put it at least some few pips below that candle, so that if the market moves high, of course, we've risked some few pips so that we can be able to catch that big move. It has normally paid off so nicely. So let's try to check for another signal, and then we see. So for example, when you look here, you had a signal to buy from here. This is where you got to buy from, right here. So if you made your buy order and then put your stop loss around here, maybe that's where the 1.5 of the ATR is. So you go short, you buy. So when you buy, you wait for this exit indicator to tell us to exit. Right here, it showed like it is exiting, but it didn't exit. So it exited from maybe around here, and that candle is this one. This was the exit candle. So what you normally do is that you don't click on exit the trade. Okay, you don't close the trade automatically. What you do is that, because our stop loss was around here, okay, you buy and then you put your stop loss here. So what we do is that we shift this stop loss to become a trading stop loss and then place it below the candle where the exit indicator said that we should exit from. So for example, we should have put a stop loss a few pips below this candle. Okay, so you put a stop loss below this candle a few pips, for example, let me say 10 or 5 pips, depending on the time frame you're using. Then you put your stop loss right down here. Okay, so when you put a stop loss right there, and the following day the candle does not put you out, of course, you would be able to get, because now you can see that it didn't exit. Okay, and then you would be able to be within this retracement and then make more money after a retracement. Okay. One other example. So we can say, for example, we can check on this trend which was selling. If you entered your trade from around here, because this is where everything is growing. Okay. So here we would have entered the trade from the baseline candle, signal candle, but the primary indicator was saying no, and the primary indicator gave us a signal from this small candle right here. So if you went short from here, okay, and then you put a stop loss around 1.5 of the ATR. Okay, here you go short, stop loss 1.5 of the ATR. Now there is this retracement, but the exit indicator says no, we are still going short. So what we do is that we shall wait for the exit indicator to show us an exit signal, and it showed it from here, and that candle is this one. Okay, so we said that every time you see that the exit indicator has given you a signal to exit, you check out on this exit candle. Okay, and then you check and then you put your stop loss at least 5 to 10 pips above this stop loss candle, so that you risk in more 10 pips, so that you can be able to get a retracement in case it is happening. And then you can see that when you put your stop loss, for example, remember we had made a sell order from here. Our stop loss is around here, 1.5 the ATR. So what we do is that we shift this stop loss and then put it after the exit indicator said that we should exit. Okay, we look at this exit candle, and then we measure where it ended from, its swing high, and then you measure at least 10 pips, and then you put your stop loss. It becomes a trading stop loss, and then you put it above that candle. So when you put above that candle and the price stays in this direction right here, like here, it made us move because this is how the market moves. Okay, it tends to rest and then it will continue. It will make a retracement, then continue, or in most cases it will rest and then it will continue. So we know that the market is going to rest, and then it happened. So instead of exiting the trade manually at once, what you do is that you put a trailing stop loss above that exit candle, and then you see that you could have gotten this move down. Okay, so that is how to exit like a professional out of the market and then collect more money. So you don't exit the trades by saying that if my my stop loss is 20 pips, then I have to target 40 pips. Okay, because of course the trend can move with all over 200 pips, and then you shouldn't be able to miss out almost 160. So that's why you miss money. So you have to maximize profits. That every chance you get, you have to make sure that you maximize it. Okay, so instead of, if you say that my stop loss is 20 pips, of course you're going to use the exit indicator to exit, because this exit indicator is far better than the 40 pips you are targeting, because it would give you a return something like 120. You are getting much more 80 pips compared to your ugly mind that you had of collecting 40. Okay, so that's how the exit indicator works. And just for a recap, every time you get a signal, for example, you get a signal to exit from this candle, don't click exit the trade manually. What you do is that you come and shift your stop loss and put it at least 5 to 10 pips above the swing low, or the swing low or the swing high, depending on the trend of the exit candle. So for example, let us get one more example and then this video gets done. So for example, if you got let us get us a clear trend. So for example, here you can see that here you had a signal to go short around here. So stop loss is at 1.5 of the ATR, and then the exit indicator says that we should exit from around here, and this was the candle for us to exit. So what you do is that you don't exit manually. You don't click to exit a trade, but what you do is that you look at this exit candle and then place your stop loss at least a few pips above that exit candle. And if the candle retraces more, yen will be exited. But if it doesn't, you would be able to catch this move down. Okay, so that is how it works with the exit indicator. I think I have explained majority of what is needed. So thank you so much for watching this video. My name is System Jordan. Don't forget to share, don't forget to like, and if you've not yet subscribed to the channel, please do, and then give me support so that I can be able to get motivated to do more training. So in case you need anything, please comment on the video and I will be able to reply to you in time. Okay, bye bye. May the markets be with you.